All right, welcome everybody. Think, ask massive, be massive, take massive action. This is an educational series. We are not accountants, lawyers, financial advisors. Our goal here is to give you the best advice based on what we know. So these are always recorded and posted back up on our YouTube channel. I'll stick that link in the chat in a little bit. So we're going to talk a little bit about massive. We're going to talk about value add to investors and partners. And then what did the Federal Reserve actually say? I don't think it was a surprise, but it's always good to talk about it. They did give some good indications. So massive capital portfolio with Realty One. So we're vertically integrated real estate company specializing in ground up construction, retail, flex space, industrial, self-storage, and mixed use multifamily. Massive Capital is an owner operated for value add multifamily assets, combined 42 years with with Realty One. So on the left-hand side, we're involved in equity, brokerage. Brokerage is on a triple net. So for those of you that understand, retail is triple net. It's where all the tenants take care of everything. So brokerage on that, property management on that. We're also involved in new development, construction, metal and wood. It's really two totally different things. We have a new massive mastermind. It's absolutely amazing. I'm going to be doing some work and setting up appointments with people. We have Trent on the call and a few other folks that are helping us. So Realty One has about 500,000 square feet of retail, 252,000 square feet of retail center for a total assets of about 290 million. Massive Capital itself has 90,000 square feet being built in Houston with Realty One. Soon we'll be able to add, with X-Space, soon we'll be able to add I went to our Harris Ridge project yesterday, and it was so cool to see them doing some work there. We have, this one didn't quite get updated. It's close to 1,500 units and around 200 million in assets. And we're very Texas focused, but we have assets in Denver, North Carolina, and Georgia. So this is the team behind the team. So you can see our team is growing a lot. Across the top are a lot of the folks that you would deal with on a regular basis. Super excited about some of the additions we've made to our team. It's really given us a lot of power to be able to do some things. Super excited on the marketing side, on the tech side, on the underwriting side. So it's fabulous. We're very excited to be part of this bigger team. It was interesting. I was at the job site yesterday, as I mentioned, Harris Ridge, and of course I'm wandering around a construction site without an hard hat, and guy comes running over, and we actually met at the Christmas party in Houston. He was one of the Realty One guys, so very fun to be able to see something happen. And then on the partner side.
Hey, Trevor, can you still hear me?
Yes.
Okay, my Zoom is frozen and it's not letting me do anything. I don't know. You see the team behind the team? That's the screen you see, right?
That's the screen that's up now, yeah.
Okay. Spinning, and I cannot do anything. It's not letting me do anything. So
team behind the team. We have gremlins behind the team, I think, messing with our tech today. So we have Shirar. So Shirar is not going to be joining us, at least at the beginning tonight. He's waiting for the sun to set so he can break his fast. We have Sanjay on the call, Mike on the call, and then on the Realty One side, super excited to be working with Bo, Pat, and Alexis. So
Thanks for you, Trevor.
Okay. Yep. So we just closed on our Horizon apartment deal 5 weeks ago. I actually just did a tour with some properties with some folks. We're actually about 86% subscribed right now. So there's still opportunities for people to be able to get in. This property here, we're offering a 2.11 multiple, 18% projected IRR, which is an average of 22 to 23. And this particular opportunity has a pref.
And if you want to take a look at the our deals in the portal, try that the QR code right here in the middle of the screen. See if that works. Go sign in the portal. You can see the deals for the massive capital deals now and the future as well. There's no obligation, no risk to sign up. It just lets you have a chance to see, and if you decide you want to invest, then you can connect further with Trevor or Jasmine Maria, someone else on the team, and get you into the deal.
Sorry about that. I was trying to work with something. Somebody was sending messages to folks, I believe. So we're also, I mentioned Harris Ridge. We still have some opportunities for investing in our Harris Ridge opportunity. We're projecting a 20% internal rate of return. This is a 75 minimum, a 1.72 multiple of your money. It still comes with a 7 prep. And this is a 70-30 split. It's actually underwritten as a 50-50 split because we believe that we're going to achieve more than this on the particular on our return.
You good there, Trevor?
Yeah, I'm good. You ready to roll, Mike?
Yep, I got it. Thank you. Can you hear me okay?
Yes.
So I did turn my screen off. I apologize. I'll just want to go for the safety that we be sure we get through this presentation unhindered further in the process. And so as a opportunities to grow together as a team for others out there with Massive, we offer a variety of opportunities, including new constructions. We do joint ventures with landowners where the land can come in as part of the deal, be the equity in the deal. You can be a LP on that, and then do the deal together, and have a joint venture as a GP as well. We also have, if you've got, assets, we got assets under construction opportunity where we can look and evaluate the opportunity there and take the project to the finish line. So we've had a few opportunities we looked at in Austin and San Antonio as well, where the deal was ongoing, either, had some issues maybe with funding or something. We've taken some looks at those and made some proposals. So if you got a deal like that, you're in the middle of the process and you need some support to close it somehow, and with the construction side of it, we can support there as well. The asset management is something we've been developing over the last year, which really, it's portfolio management as well. And that the concept there is we built a dashboard that links to any of the property management software and data, and sucks all the data in, so you can actually go and talk directly to the property manager ahead of time. Like, rather than waiting for their reports, you're going to have your data that you can go ask them questions with from the beginning. So we're doing that and starting to offer that as a service to some of the larger operators that may be looking, and funds they're looking to look at portfolios together. CapEx, similar to taking on the construction, we can do the CapEx projects, whether that be steel frame or stick built type constructions. So that's an opportunity for us with the in-house GCs that we have now in our sister companies. And then credit enhancement, maybe an odd term for some people, but it's basically similar to what people would think of as a KP, but being able to bring both the experience, which some of the lenders are going to look for experience, not just, hey, I got a balance sheet, but also, do you have the experience? So balance sheet, experience, and sorry, the poll came in front of the poll. So we have a poll running. If you guys want to take a chance there, please, we'd love to get your feedback on the poll. It came up on my screen. It blocked my view for a minute. So please give us your feedback. It helps us serve better how, what people are looking for and what we can bring to these Wednesday calls. So that's the credit enhancement. And then to wrap that up, as we have CRM, which it's coming out new and fresh now. It's called Client Harbor. We'll have some new options there we'll be sharing, but Client Harbor is a CRM that we are not giving out, that we're selling as well. and providing service to. So it comes with a website, CRM, and some automation built into that with some of the templates we've been using on ours. Everything that we're doing, you get a view of that. And then, as I mentioned, asset management for larger operators. And Trevor already talked about the mastermind that we have. So those are some of the key things of how we can partner together and go forward with things. Sanjay, are you back and available at least from a able to share and talk a little bit?
I am here. Can you guys hear me okay?
We can.
Yeah.
Very good. Thank you.
Loud and clear.
Okay.
Thanks. Glad to have you back.
Thank you. Yeah, I had to just reboot, but that shut up and reboot always works.
All right. So so Sanjay, what did the Fed say and what really happened? Last week we talked about, what the Fed may do or what they were talking that they may do. And then we got some information and then we said, okay, let's come back this week and actually relate to what did they actually say and what does that kind of mean, or, what's some interpretations of that? And so I'm going to let it over to you and I'll go forward on the next slide here.
Sounds good. Oh, you can click next. Yeah, so before the meeting and what we talked last week, Fed said no rate cut until later this year. So in today's meeting, they said they were going to keep the interest rate the same. They were indicating 3 rate cuts potentially by the end of this year. And they were saying further rate cuts next year, depending the economy, right? So last week we went over a little bit about what the Fed makeup is, how do they decide, how does everybody brings their information and gets to that, and then they reach on every meeting reach a consensus to get to this, right? So let's see what they did. You're gonna click again.
Getting to it.
Yeah, there's a little bit misalignment there, but at this meeting, there was no rate cut or increase, so the rate was kept same. That was expected. Our position from Massive Capital side has been that I'm not sure there will be 3 rate cuts, but there will be 2 rate cuts for this year, and we are. I love that, Trevor. The Fed would never be misaligned, and I'm going to talk a little bit about that. They reiterated in the meeting today that they are expecting 3 rate cuts potentially by the end of this year. Looking at all the things and the way we look at the market data and everything, it really still is. I think 2 is certain. Third is, we'll see how if it happens, it's great. If not, we're planning for 2. Before today's meeting, for the next year, there really wasn't a clear guidance, but in this meeting, they said, 3 this year and likely only 2 rate cuts next year, not, whereas before that, there was thinking that there may be a little more aggressive rate cuts next year. So only 2 next year means not as aggressive next year and kind of stays flat. So if I can share my screen for a second, I want to share our handy dandy.
We'll try that, Sanjay.
Yeah, let's see.
And then, hey, I would like to put a H in the chat if you guys are in Houston, just to get an idea of those that are in Houston. So Trevor talked at the very beginning about our events we're going to have here on April 5th, how to do a multifamily deal in a day hackathon. So if you're in Houston, put an H. If you're Austin, an A, Dallas D, just to get an idea. San Antonio S. And so we can see who we got here, and we can get a hold of you guys or see if you want to, come on to the hackathon with us as well. All right, Sanjay, back to you.
Thank you. Yeah, I'm really excited about the hackathon. If you have time, maybe I'll share the some of the agenda items and things we can talk there. But so yeah, this is our chart here. Anybody can go look at it on CME Group there. Of course, now it's showing for the next meeting, but what the chart we looked at in the last week was showing for the meeting today, and it was a very similar indication where 525 to 550, which is our current rate, was showing the highest probability for that, right? So in this chart, if I look at it, the easing by the end of this year, like there is a easing, there's 100% probability there will be eased. Now, will it be 1 or 2? We still out there. So at least for this Fed meeting, Fed really did what they said, and the biggest challenge or the things that affect us is, Fed says something, and that is built into the pricing in the market. So even though I'll stop share, and whoever was sharing, can you share that same slide again, please? So even though between the last week and this week, there's really not a big change in the guidance from the Fed in terms of the interest rates for this year, the market, whatever the Fed said today, the market jumped up again, right? So, Mike, are you sharing that slide, or was Trevor sharing the slide? Please go ahead and share that.
I think it was Mike.
Yeah, I was sharing just a second.
Okay. So really, there's not much change between last week and this week, but the fact that Fed did not cut the interest rate, the fact that the Fed reiterated that they're going to cut the rate 3 times, and even though a little bit less rate cut next year than before, market just is bullish and goes up. So the pricing is built into the market based on what Fed says, right? And once the Fed says something and the pricing gets built, it kind of leads to where Fed cannot do what they said, right? Because the market overreacts and prices that in. For example, and how did this impact us on the real estate side and what it does? We were looking at a deal here in Dallas. The rate cap is expiring in May of this year for that seller, and seller is potentially looking at options, and they're exploring. So we go in, and it's an out of state owner. They didn't. They struggled a little bit. Occupancy was dropping. Delinquency was increasing. The property management wasn't quite performing what they should be performing. So the seller is saying, well, here, my rate cap expires. I got a $500,000 to $1 million expense to buy another rate cap. Property operations is not good. What do I do, right? So they're exploring the option to sell. And we looked at the deal. We made an offer. We were about $3 million off on what they were wanting versus where we could offer based on the property. And it's a 55, 60 million property size. But since Fed is saying, well, we're going to cut interest rate 3 times this year, seller is saying, well, if the interest rate gets cut, my property value is going to go from 50 million to 58 million just because cap rate is going to drop in conjunction with the interest rate, right? So the market start to price that in, and that doesn't allow Fed to do what they said they would do. So that has been one of the biggest thing from a Fed perspective, to how to be transparent, how not to not to have a surprise at every meeting, but at the same time, not disturb the markets while keeping that transparency, right? So the only reason now the Fed may not do these 3 rate cuts or 2 next year or do more than that is if the economy has a drastic shift or a drastic change. So if there is a lot faster slowdown of the economy than what the numbers are projected, then the Fed may have to cut more. But looking at the stock market and just the projections of the data, the Fed is being transparent, trying to be transparent and staying there. So, and just to kind of talk through the same point, Mike, would you mind flashing the chart that had, I think it's 3 slides down, that had the interest rates? These are the slides from last week that we talked about the Fed structure. Go to the next slide. I think there's a next one. One more. Okay, I don't have. There was an interest rate, historical interest rate slide that I had last week, but Mike, let me share again. I want to share the this values.
Yeah.
Interesting. So we look at the stock market just as a proxy for the overall pricing, and the interest rate and various factors get built into it. So one of the this slides and set of things that we follow and look at it, Green Street is one of the firm. They provide data. They kind of do some sort of evaluation. But going back to 97, for the commercial real estate valuations, how it increased and how it did, and of course they don't have a metric here if it's in millions, billions, trillions. Definitely, I don't think it's in trillions. But generally, directionally, it's right how the commercial real estate kind of have hovered or changed and moved around, right? So going from 97, slow and steady, and then we had those low interest rate environment that increased the pricing. And then we had the 2007, 2008 bust that happened starting with Lehman Brothers and Bear Stearns. And, the values dropped, and then Fed just kept it low interest rate, more low interest rate. And that's the cycle from 2009 all the way to 2019, 2020. So that's an 11-year cycle where the pricing, asset pricing was driven off of those low interest rates, right? Like if I were to draw a straight line with this, we would still be lower. And then there's a steep curve. And then we have our 2020 COVID prices drop, but they went up because of the low interest rate again. And now we're seeing the current cycle. Right? So it's really, that's what affects us. That's what, we watch and we look at it and go there. So anyway, so these are just a little bit of the debt overload, and then the debt party is over. And really at this time when the Lehman Brothers, Bear Stearns went out, there was no debt. There was no commercial debt available. If you had a loan coming due during this time, there was nothing available in the market. That's how tough it was. So, and then of course, Fed saves the day. The interest rate kept keeping the low. We had our COVID time. Free money. There was a lot of free money, lot of availability that pushed the pricing up. And then the party's over, and now we're waiting and waiting and watching. So,
but that's okay. The last one there, that was where I was doing an extrapolation of, if you like, 97 through 2003, and you're depending which part you extrapolate. Like if you pick that little dot on there, like you're almost a flat line to where we are right now. It's not like significantly out of, you just have some ups and downs, but you know, that I love the historical growth of commercial real estate, right? It's
Yeah. So very interesting data on this, and this curve really to me is sort of that mean reversion that happens. It goes up and down a little bit, and then we overshot a little bit, and now it's going to come back to this. And is it going to continue straight line or overshoot? Really depends. Big part on that. And the other part we like to see is every time any of these events happen, they are unforeseen and unforecasted, right? And the the kind of the funny thing about that is, well, if we can forecast something and we can see, oh, this might happen, well, guess what? The Federal Reserve balance sheet and the power is so big, they can take actions to turn the ship around one way or the other, right? So it's always going to be something unforeseen, something that's not forecasted, that's going to lead to these type of ups and downs and turns. So, and that's what makes the Fed forecast such a, like, hey, did they do what they said they will do, right? And here we are, we wanted to see last week and this week is Fed doing what they said they will do, because it changes like this. So will we have another unforeseen, unforecasted event? Absolutely, right? And we gotta be prepared. We gotta be ready to take that hit whenever that happens. And what are the lenders doing? Loan modifications. Are the lenders doing loan modifications here? Absolutely, they are. They are working with the borrowers, and that stuff happens and carries through, but you really don't want to be stuck in that one of those cycles.
So quick question. With the pending election, I know the Fed is supposed to be non-political, but it's pretty hard to believe, right? Do you think a pressure of an election can change and they might respond better, just to, the current administration would put pressure on them to do a decrease, to stimulate the economy, to help? Do you think that's possible, or is that not possible?
Yeah, so interesting question. Mike, would you mind sharing the presentation again? So, the Fed
yes.
chairs, and what we talked last week, there are 12 divided into 12 different zones and the districts, and each head have access to the data in terms of, are the mortgages getting paid on the 1st or on the 5th, or what percentage of people are behind on mortgages. So a lot of that data flows through these districts so the Dallas had, the Kansas City, Chicago, St. Louis, all of those feds bring that data to today's meeting, right? And then they vote and they say, well, Dallas Fed would say, well, I don't think we should increase or decrease. St. Louis Fed chair says the same thing. So these are the 12 heads who put their vote, and if there is a majority on an increase, decrease, or stay flat, that's the decision, right? So there is no like president can call the chair, Fed chair, and Fed chair can influence and go one way or the other, right? It doesn't happen that way. So from that perspective, I think Fed is fairly, not so political. Given the election year, stock market tend to behave certain way. If I look at the last, since 1920 or 25, we have had, however, I think it's like 26. Since we start tracking the stock market data, there have been 22 presidential election years. And out of those, there are only 3 years when the stock market went down, right? Correlation or causation, I don't know. I'm not an expert on that, but market tends to be bullish the year when the presidential election is there. So because of that, Fed is going to reduce only 3 times instead of they would have reduced 5 times, maybe, maybe not, right? But is there a direct influence from the president or House or Senate? I don't think there is a direct influence or even an order to like, hey, I'm giving you order, increase or decrease the rate. I don't think that happens, or that can happen because each of those areas and districts are feeding their information there.
Okay, and I know they had a goal too of 2% inflation.
2%.
Which is pretty low. I mean, 2% inflation is, pretty low. That it seems like a lofty goal.
Yeah, and it's given all the things and cost of everything. That's a balance for stabilized economy like United States. 2% is a good goal. You go to India or China and some of these other countries, I mean, they've got a very different inflation goals because there's no way they can do 2%, right? So 2% is a stabilized economy type of a goal. So, but it is as long as we keep that, it's a pretty good. So.
Awesome, thanks.
Good questions. Are there any other questions? I think that's all the prepared material we had today. I'm going to check the chats. Were there any questions in the chat?
I didn't see any questions, but feel free to put them in the chat, unmute yourself, raise your hand.
Yeah, so any questions? Somebody said, do we send out these recording? Oh, no, that's answered already.
Yeah, the recordings, yeah, we post them on our YouTube.
Okay.
Hey, Sanjay, and you mentioned that in the 2008 era, when there was no more loans to give, nobody was lending. Were a lot of these syndicators or individual investors, did they just give the properties back, or were there extensions given to a lot of these buyers that were folded paper?
Yeah, and when we say there was no lending money available, there was still lending happening, right? It wasn't like it was absolutely zero, but it was quite a bit reduced, right? Drastically, like to the tune of 40-50% reduction, which is huge. So during that time, there were some foreclosures, there were some quite a lot the commercial paper that traded. But lenders have no interest in going through, and when they're going through this type of tough environment, what are they going to do? Taking 10 properties, foreclose on them, and hold it, and it's going to go to crap anyway, right? So lenders have all the interest to work as long as it's a decent operator willing to come to the table and work something out, and there's always something. So there was a lot of that is happening now. It happens, it squeezes in other areas and everywhere else it can. So, and there was.
I was just going to say, there's a significant difference too between this crunch and that crash, right? Because that crash was a crash because of over lending on assets and lots of other factors, where this was purely to cool down inflation. It wasn't the result of over lending or anything. So significant differences, versus like a catastrophic distress and probably an over move to readjust is the way I maybe think to say it. So
yeah, and that's a good point, right? Like what happened in 2008, 2007 was unplanned and unexpected, right? It came at for an angle from a lot of people, but this one, did we expect exactly in 23 and 24? No, nobody can really predict the time, but it is planned, right? Fed said we're going to increase the interest rate, we're going to slow down, we're going to do this, and that's exactly what's happening. That's what's rolling down. And now they're saying as soon as inflation hits 2% or economy slows down, we're going to cut the rates again to get back there. So it's a big difference. A good point, Trevor. Very big difference.
And it's super hard too with the inflation, because with high interest rates, people's mortgage payment is normally, up to a third of their so that with the mortgage rates going up, it's hard to have inflation go the opposite direction to a certain degree.
Yep. And, I think in my personal opinion, a lot of manufacturing is another thing that went to overseas, potentially China and other countries. That was a key to keep that inflation low, right? And now with the lot of the supply chain breaking down, a lot of that is has come back. So that's hitting on the inflation because it's coming back. But AI, on the other hand, is actually, reducing the cost for things. So it's leading to the control, and it's a balance, right? So where do we balance and how do we land is how it unravels and we see where it goes. So it's an interesting movie, real life movie that we watch, and we see and we go from there. So.
I have a question. So with today's news, how does the strategy change, or does it, for massive capital and what you're trying to do here with, after the merger and so forth? Does this change anything at all? Are you going to change your strategy, adapt, or leave it as is? Do you have the right strategy in place, I guess?
Yeah, good question. Good question. So today's meeting doesn't really change a whole lot of our strategy. We're still in the boat of like 2 cuts this year. Right now, if a deal comes to me for a new agency loan, that means I'm going to be locked in for 5, 7, 10 years. Interest rate is going to be that 5.9, 6, 6.1. So the deal cash flow has to be really good for me to be locked into that high interest rate. So we've done most of our deals we have done recently have been loan assumptions. So, that still continues to be an attractive avenue, because you can get into potentially sub 5% interest rate. And depending on 2 years, 3 years, however many are left, by the time interest rates is lower, you can refi it or go to the market and sell it, right? So yeah, not a lot of change on our strategy from today's meeting, because it really kind of continued and not a drastic shift from Fed. If you underwrite anything that I'm so if you get a value add where we get a bridge loan today, then yeah, I don't want to have a refi in 1 year, but refi in 2 year with 5.5% is a fairly conservative, because they lower 2 times this year, that gets us to 5.5. Anything more is gravy on top, right? So we're continuing that same thing. Market, didn't really change much either. But good question. That's exactly what we are trying to evaluate every time, and we stay touch and close to the Fed meetings, the notes. So when the minutes come out, we go and read the minutes, and a lot of the times, like all these articles that gets published in the newspaper, and you read the minutes, and it's like, oh, they said this about the long term, but that got missed, and we really go read and keep that. So, good question.
Excellent.
Awesome. Mary, I thought you were cooking us all spaghetti tonight.
Well, if there's other questions, please, you guys put your hand up or chime in or drop them in the chat. I'm just going to share a little bit more about the hackathon here. And I know Trevor shared at the very beginning. Just sharing here. I put another link in the chat. This is to the page about the hackathon, but it's secrets about strategies on finding the deals, the practice tools of analyzing deals and, you know, and learning to close the deals. And, we're going to go through and actually go find deals. Have you guys have whoever attends, you know, joins us finding deals, calling brokers, calling with us calling together, you calling the brokers, talking about the deal, find out how much they really want, what's the information about it that's critical, underwrite the deal, and you know, everything that you need to do in order to close a multifamily asset. And we'll go through the whole value chain of it as well in the beginning of the whole process. Here's a little bit of the agenda, Sanjay.
Yeah. Thank you, Mike. This is perfect. So the theme is, you know, end-to-end process to see. So we will have, you know, we'll share the information for whichever step of the process we are on, be it the finding deals, assessing it, underwriting it, making a decision, doing an LOI, what to think, what to say in the LOI, how to negotiate, writing the PSA. So we will have little presentation on each topic, but then the key part is hands-on, getting down and dirty and doing it. So we're gonna have the steps to do, and then we're gonna share as a team, everybody, hey, what did you find? What did you do? And again, you know, every deal is unique. So it takes a years of practice to really get it underwriting, but getting your hands through, you know, 1 or 2 or 3 deals, and you know, you get stuck on a little point, somebody is there to answer that question that day. Whereas if you're doing on your own, you get stuck, you leave somebody a message, they call you back, next thing you know, 2 weeks pass by and nothing has happened, right? I personally just hate that, right? So that's what we're doing, something unique. I'm really excited that everything will be there and you can go end to end, and you can take away that getting out of this, if you actually stay awake, participate, and ask questions, then you will be able to get out and take some actions. So
Hopefully
really
we get
excited.
lots of coffee.
Coffee, we will have coffee. So yes. Yeah. So it's at the Holiday Inn. There, we are covering the cost of the Holiday Inn. We are asking, I think, small amount so we can order the lunch. It's gonna be a working lunch. It's gonna be a long day. We're gonna make you work hard. So come prepared. We work hard and we like to work hard, play hard. So we're gonna try to order a lunch and some snacks. So we're in a room and get it done that day and everything. So yeah, look forward to seeing whoever can make it. The day and time works. Everybody there.
Yeah.
Somebody asked, is this in Dallas? This one is in Houston.
This will be in Houston. We're doing, April 5th in Houston.
And this is a 3-part series, right? So this is the finding the deal end to end of this. Second part of this series is the raising capital. Once you find a deal, you got to raise the capital, form the team. That's on April 20th. I don't think we have a landing page for that yet. And then, of course, the third part is, well, you found a deal, you raised the money, you closed. Now what? Well, you got to asset manage and deliver. You buy yourself a job. So that would be the third. So that's the 3-part series, hands-on, that we're going to do for this. Harita, yes, we will do this in Dallas. We have a bigger team in Houston, so it's a little easier to do in Houston. But with Trent joining me, David Foran joined us for asset management, massive capital, beginning of March. We're building team in Dallas also, and we'll do in Dallas too. But
maybe we'll do in Dallas. We'll see. Right now we're only doing one in Houston.
Sorry.
So if you want to go, you better sign up for the Houston deal.
There you go. Yes.
We
If
do
we
have
get
a
good turnouts in
networking
Houston, then we'll
event.
do Dallas.
We do have a networking event in Dallas Monday night, so I posted a link to sign up for that. Shar is going to be speaking at a big multifamily conference, and so we always try to add a meetup when more people are in town.
So I'm sharing my screen here also on, I'm going to share the link. If you want to set up a call with different parts of the team, you know, the investor relations or the education, deal submission, we have different people that talk to about those things. So feel free to set up the calls and you go through, and like investor relations, they'll give you some options. Again, maybe once you get in there, to join or sign up with one of the team in there once you're in to that. So
the conference that we're talking about, are y'all going to have one in Austin?
Shelly, you can make it to Houston, my dear. Load up Lucy and the rest of your ladies group and drive to Houston. Come on.
We'll see.
Dennis, I already saw Dennis McQueen in here, said he signed up. He's in Austin. He signed up and he's coming over. Trevor's coming. Ellen's coming from Austin. Brenda's coming from Austin. Let's make it an Austin party in Houston, okay?
Oh, okay. We'll see about that. We'll see about that.
Hey, Steve asked the question. So the first one is on April 5th. Second is on April 20th. And we haven't booked a date for the third one yet. As you can see, there's a lot of planning, a lot of actual logistics that we need to figure out, because it's a real hands-on work. We're going to make you work there. It's not a sit and listen, doze off. It's you are working. So we haven't quite figured out the third one yet, but likely May. And, you know, with the summer and kids and all those schedules, we'll see when do we do the third one, maybe fall, but we'll figure it out soon.
But keep in mind there are 3 different unique ones, so you'll want to be in the whole series to get the full context and value.
Yes, Alan can carpool from Austin. So Alan is part of our acquisition team. She's awesome. Since she's joined, we have made leaps and bounds of progress. So she's in Austin. She's coming to Houston for the event.
Awesome. Excellent.
Feel free to connect.